Welcome traders, this is Patrick from Trading123. In this video we're going to talk about our new opening range breakout strategy for NinjaTrader. Basically what the strategy does is it trades the breakouts or the breakdowns, the sell-offs of the opening range. And it works like an auto trader, but it only trades the opening range, so you can probably get one or two good trades out of a day. And this is mainly for traders that just want to set it up and trade something that will make 1 to 2 trades a day, and anywhere from a couple $100 to $500 or more, depending on how many contracts. But usually it's the breakout or the breakdown on the short, and you set how many contracts you want to trade, targets, profit goal. And what we do is we typically trade 3 contracts each day on whatever crude oil, YM, ES, NQ. But you can trade all the other micro futures, gold, whatever you want to trade stocks. So there's no restrictions in using it. So here we're trading crude oil, and these lines above the opening range are fib levels. So those usually acts as resistance zones. So let's look at the first trade here. This is on October 1st, 2021. I haven't posted that many videos on the strategy, so you'll see some more videos in the next coming days. So we're trading 3 contracts. It gets long here, 75.11. Our first target hit is at 12 ticks, which is usually a good range on crude oil. So we're out at 75.23, and the second contract gets out at 75.29. That's what these green lines are. It shows when we exited. So that's an 18 tick profit. And then the last contract is the runner, or your third contract. And once the goal is hit, it stops trading, puts this green mark on the chart. And the profit and loss will be shown down here in the right hand corner. So this trade minus commission made $496. And then with the buttons over here, you can turn the strategy on and off, and only take long or short trades. And you can use the buttons to enter a trade, but it will only basically trade whatever you have set up. So if you have 3 contracts set up, you hit the buy button, it's just going to trade 3. You can't change it. So let's look at another trade, and this one is on crude oil again. So basically this was on October 5th. We're playing the opening range. Crude is trending up, and up we go. It triggers a long. Now what will happen is these trades may happen very quickly, as you see. So it gets long the 3 contracts at 78.84, hits the first profit target 12 ticks later at 96, and then the other 2 get out at 79.04 for the max gain. And the fib levels are right here plotted on the chart. So it went into the first fib level, then later on into the second fib level. So those are your support resistance levels. Let's look at one more trade. So that trade, yeah, we made 506.74 minus commission. Now here's a trade to the downside. So there's your fib levels. They're labeled. They didn't show up on the other chart because it happened so quick on the breakouts. They didn't have time to plot. But there's the lines. And basically the fib levels identify support and resistance. And then you have your midline here. Once this midline is taken out, there's no support, and basically This is a line in the sand that institutions use for gauging to stay long or short. So there's no more buyers here. So it gets short 3 contracts here in the ES and rather quickly hits its target goal of 500 minus commission. We made 488.36. So it got short here at 46.50. First profit target is hit at 12 ticks at 43.50, and then the last 2 contracts are out at 14 ticks, and that's all you need to make, a $400 to $500 goal in the ES each day. Now down here is the profits that we made on it. It shows this. This can be turned on and off. For those that want that visually displayed, and that's how the strategy works. So again, this is a strategy that's just meant to make 1 or 2 trades during the day. Here we're trading the opening range breakout during the first half hour. Then after you set this up, you could trade the opening range, say from this is 9:30 to 10. So you could set it up to trade, say the low here at 9:45 till 10:30, and that's all explained in the manual. Because sometimes you'll get a sell-off and then you'll get a breakout back to the upside later in the day, after 10:15, 10:30 going into 11, and vice versa. So the manuals and videos explain how to use it and how to set it up. It's very simple. You just select how many contracts you want, your stop, your goal, profit goal. We give you a guideline as to what we use for stops in our trading. And with the opening range strategy, you do have to give it a little more wiggle room to trade. You don't want to use a tight stop because you could have a bounce back and get stopped out, and then 2 bars later it sinks. So like I said, once it lost the support here of the midline, institutions are no longer staying long. Nobody's trading on hope. Hope doesn't work. If you trade on hope, you might as well go smoke some dope, because trading on hope does not work. I was in a chat room once 10 years ago, and a guy called along. He says, I hope it's going to go up. I hope it works. So I shorted it. He was wrong. I was right. So this is Patrick from Trading123. Hope you enjoyed the video. Be sure to sign up on YouTube here for our YouTube channel for more trading tips and videos on trading. And like us on Facebook and Twitter, and go to our website, sign up for our new newsletter and software discounts, anywhere from 10 to 20% off our software. So be sure to sign up for that. Until next time, we'll see you in the next video. Good luck with your trading.